All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for June 6th, 2022. And so I had a good lunch today with Betty Holtman. She's our friend from Winnipeg. She's treating herself to a trip to a crypto convention down in Austin, and she stopped in on the way. She's driving down in her beautiful motorhome, and we had a nice meal, and we were talking about our plans for a niche course in cryptocurrency trading. She's also working on some deals where she can create NFTs that yield interest, but which can also be sold directly without a broker. And so I'm really interested to hear how she's going to develop that, and we'll see what we can't do about getting that out to the team. And she's awesome. All right, so let's get started with sniper trades of the day. So this is Alcoa. These are all on 3 minutes. So the blue regions on here are that was the legacy from yesterday. So that vertical blue line is the close, just so that you know. And I'm using the simplified sniper setup. This is Alcoa. This is a PSAR flip. I consider this an SSC. My risk line would be right here at that PSAR dot. So the yellow box, the darker yellow box, is the standard R10, and so you can see that I've got I'm taking less than a full 1R risk on this one with the PSAR. Okay. By this time, second position in, because why not? It's got about, whoops, sorry about that. Trying to get another yellow box in here. So we can calibrate that by size. So we're better than one R in hand and momentum, and it has cleared the previous price action kind of decisively, so just why not? At this point, I put it was starting to stall, and I could see the the air starting to cool in this hot air balloon. And so that blue box represents half of an R10. So that means if both positions sold off and hit the red line, I would be down 1R. So this is about 1, 2, holding about 3R in the first position, probably 1.5R in the second one. This thing sold off and shortly thereafter and hit the red line, so that brings in about 3R on Alcoa in the usual way. This one was the Russell. I treated that as a Kata 2. There's my standard risk box. And nothing going on, so that was a fractional loss. That had, 15 bars, nothing going on. So I just leave it alone. Maybe half an hour loss. Tesla on 3 minutes. This is the most important stock in the world. This had a great big gap up and then immediately started selling off. So this was the gap up opening was up here. and it sold off the MMRB in the first bar. The second bar had a slight retracement, but not much. And then when it broke through the low of the previous bar, that was my short with an MMRB at the top. Check or hold. And then my target on this was down to yesterday's price action. So I was looking at 2 or 3R on that one. This one started to reverse right where it was supposed to, and as it moved up, it essentially moved a risk box. I thought I had that marked off. I guess I don't. If we take half that box is about right there. That's about half that box off the low. So why not? That's about 1.5R. Treated this as a Kata 2 because we have a nice low in the RL10s. So that's a Kata 2. Check or hold. That's our first trade. And now this one's going to be a Kata 2 of some type. And the bottom of the RL10 is the execution risk, and that's the perfect PSAR flip range too, so it worked out perfectly. By this time, when it started to peak, there was nothing else going on. It moved a full or a half of that wrist box off the top, so I was able to keep like a no lose plus dinner for 2. PSAR was getting ready to time it out, so why not? Fractional. Then the PSAR flip happened, so I get the. I'm going to take this one short now. My execution stop is right at the PSAR dot, so I'm limiting myself to about a 0.8 loss on that one. Check or hold. My initial target for the downside wouldn't surprise me if it comes down and tests here. If that fails, then I think it comes all the way back here to test that. Okay. So I'm most likely not going to get a second position in on that one. Sorry, that should be here. And then this is the, oops. Sorry, that's the second trade. So now it's coming down to test this support level right here, right? And so I'm holding about 1R in hand on this move to here. That's about 1R. So I just decided that, look, if this test fails, in other words, if this thing falls through here, that move is going to happen fast. So I'd like to have 2 positions on. So I put in a very tight stop on my second position, like the 1 bar high. So I'm not risking much at all, maybe 50 cents on that one. So I put the second position on. And I don't remember what this did, but the point is that if it works, it's going to work big. If it doesn't work, then I don't lose much. Check or hold. Okay. Yeah. So that's posturing for a second position. This one is XBI. This is the S&P Biotech. This is one of those top 30 very liquid and very volatile symbols that we see every weekend. So this is similar to the Tesla trade in that this thing opens up here. Runs up and then immediately sells off an MMRB. Well, I wait for it to come down and break below the low of the first 3-minute bar. So I get that entry, which is to me like confirmation, new low of the day, and confirmation that it's running back into all of this. And so my stop is the MMRB off of that. So the MMRB was way up here and sold off that much. And then when I took the risk here, I'm taking one MMRB to right there. Okay. That next bar was really nice. This thing tends to, this is a narrowly defined ETF that moves sharply like this because it's not made up of a broad mix of companies from many different sectors. This is very narrowly focused on the biotech in the S&P. So it's large caps, but it's also very narrowly constructed. So the volatility can surprise you. At this point, I'm stalking the exit. It came down and hit the PSAR and then started to reverse. It rolled over, so I put a second position on when it broke through. When it broke through the PSAR again, it never even came out of the dragon, so I said, let's give it another try. This time, the reversal happened pretty quick. It didn't really run like I wanted it to. You could see the range was getting smaller. And so it was holding down here. And so it made that little move back up. So I took that on the two positions. That's about 1, 2, almost 3R. Continuation pattern. This is a Kata 2 to the downside. The RL10 could not even make it through the dragon. Crosses back over the baby dragon. The PSARs are still just declining. It's making a new low of the day. It's very close. In another few pennies, it'll be a collapsing dragon anyway. And so if I look at it this way, it's kind of basically a collapsing dragon off that. So that was basically an automatic reentry. And then it didn't follow through. So just scratch. Another Kata, I treat this as a Kata 2 also. I'm seeing the great big humps right there. So I take that as a Kata 2, and now it has broken. It's broken the PSAR. So standard work. In this case, the standard risk takes it right to the top of the dragon anyway, or top of the RL10 anyway. So off we go. And then by this time, you should have your stop in somewhere around there, and that's not going to lose any money. Okay. Next up is DBA. This is the agriculture ETF from Deutsche Bank. Has a great big gap up. I take that as a favorable sign. Failure to fail. I look at that as a COTA 2. Like this. Now, DBA is the opposite of a volatile intraday symbol. But when it gets rolling, it can be persistent. And I like it as a anti-inflation play. So I'm just tracking the PSAR dots. At this point, I hang the risk off the top in order to place my exit here. So really, to me, by this time, this is just a science project in food. So no lose on that one. This is Brazil. 3 minutes again. Gap up, selling off. Fails back through the dragon again. So what I'm noticing on this one is that you get this first surge up. The second surge cannot even get through the dragon, and the dragon is already sloping downward. So I take that as a sign. And then here's the standard MMRB. And if it can fail through this price line, then I'm feeling pretty good. Feeling pretty good. Feeling really good. Wondering why I didn't get a second position on this thing, like right in here. I think it was a span of control. This was a place where second position was called for. It's starting to stall. The MACD lines are starting to roll into an uptick. I attach the initial risk box, half a risk box to the low. That's like a 1-2 exit. So I just take it there at the edge of the dragon. Feels pretty good. I like the idea of the money management stop. It's becoming very uncomplicated. Another word for uncomplicated, a better one might even be simple. What would we call that entry? Yes, indeedy. Straight up. And now I've got the standard risk box on it. So if my entry is here, the standard risk box is here to the edge of the yellow, but I'm going to execute off the belly of the RL10. So I've already limited this to about a 0.8 loss. And it rolls back through the belly of the dragon. Oops. Yeah, this thing did not take off. It's supposed to go. It did not go. So now it feels like a Kata 2 shaping up. Could have taken a Kata 2 right there. Probably should have. Oh, I did take it. I'm sorry. That was a stop and reverse. I was surprised. I was sure had gotten in it. So I took this one as a Kata 2. I'm not waiting for the PSAR to fail on this one because I've got this. I've got these solid rollovers in the RL10s, and as soon as that comes through the dragon, I'm just short right there. Standard risk box is up here to the top of the yellow box, but I've got it locked in right here, so I'm only risking about 0.5 on that one to begin with. Now, by this time, when it rolls down to here, I just arbitrarily move that stop from here down to here and just lock in that little fractional gain. This was sort of a command override just to lock that in right now. Everybody see that? Part of that was because the previous trade was a loss. I'm going to get some of my money back. This is IWM. Oh, I think I already covered this one. Yeah, I think I already got that one. That's the quick loss. Yeah, we already covered that one. Duplicate. All right, here's Treasuries, TLT, which trades not like the risk-free rate of return, but it just trades like a regular asset class. It's kind of amazing. So there is a gap down. It rolls up to here and then immediately starts selling off again. And it's already below all of yesterday's price action. And it gives me a MMRB from here to here. So we just take that one short. Should be locked in by now. This one sells off all the way to here. I put the half a wrist box back on it as it starts rolling up, so I just take the exit here. That sure is simple. That is really, really simple. What made that one nice was the exaggerated sell-off on this one particular bar was large. I mean, this bar opened here and went all the way down to here. That's like almost a 3R move in 3 minutes. So as soon as that reverses and starts moving back up, one blue box off the bottom, just take it. And that captures about 3R from here to there. Now, the price rolls over quickly. Okay, it does not even come through the dragon. And now the RL10 rolls over, crosses the baby dragon underneath the dragon. So I just take that as a COTA 2 because in another couple cents it's going to be a CD. So I just take that with a standard risk at the PSAR. Back in on the short side, check or hold. Nothing wrong with that. The RL10 bottoms out here. I hang the half of a wrist box off the low or attach it to the low. I take that and we get that trade. So in treasuries we get this trade and we get that trade. Not too shabby. The price rejects the dragon and the PSAR is still pointing down, so I just re-enter short. That's the same pattern as this one, and because why not? By this time in the trade, now notice the sell-off on leg 3 was much shorter and less persuasive than leg 2. So if we count this as leg 3, we see that's a lot weaker than leg 2, which was large. And leg 1 was fast and large. Leg 2 was orderly and large. Leg 3 was shallow and had already started to reverse, so I just made bank on that one. What would we call that entry? Oops. SSC. And by this time, with 2 bars that it could not make a new high, and I see this thing starting to slope down, I just raise the stop up to here and lock in a not lose. Again, not going to lose anything on that one. I just put the little wedge in, like a little doorstop, right? To stop the madness. All right, a little later in the day, it's now after 12. This is Tesla, still 3 minutes. This was that was the short trade that we had before. Now here's 12 o'clock. Here's the oversold. MACD rising. We get an uptick. You can see the intersection of the RL10 and the PSAR coming down. So what might we call this trade? I would agree. By this time in the trade, I notice that I am a wrist box off at the time of this little doji that's forming right here. All right. Let's just zoom in on that rascal a little bit. By the time this doji is forming, I have moved 1/2 of a initial wrist box off the low, right? And the PSAR is moving up, but it's still underwater. So I just look at this and say, Tesla's been getting murdered today. Why wouldn't I just lock in 1/2 an R right now? So I just move my stop to here right now and lock in the blue box. So in this is a case where instead of hanging a blue box from the top, I could do that. If we do that, this is what that looks like. Here's the size of a blue box. If we hang that from the top, it's almost the same, but in this case, I'd rather lock in 1/2 than give it 1/2, right? Because it is so close, it's so close to the peak of this RL10 and the PSAR. So this is strong resistance right here. It's failing where it's supposed to fail. So I'll just lock in that move to right there. Check or hold. Here's where that thing shapes out. Go a little bit later. I just get a little more. So this is that same trade. Price compressed a little bit. That blue box was the blue box. It ends up moving a little bit higher. Crap, sorry. This is where the that previous little discussion was occurring, where we were looking at that previous peak, and it was stalling right near that peak. It moved a little bit higher, so in this case, I hung the blue box off the top, and then ended up taking that as the gain. So about a 0.8. A 0.8 gain. Standard SSC. Don't lose money. Check or hold. Tesla is now flirting with 700. Key psychological level. What could we call this trade? Yep, caught a 2. Good dog. Now, what I want you to notice on this one is I started playing with this idea too, that as soon as I put the entry in, I'm now starting to just drop a blue box of the 1/2 of the wrist box on it, just so I can see the boundary between, so that's the entry. And then it's in the blue, it's kind of chilled. When it moves into that green box, it's between 1/2 and then a full R. So if it gets to the top of the green box, like it did here, that's where it's an R in hand. So now what I noticed was, at this bar is where it moved beyond 0.5R. Let's try that one again. Yeah, so this was the bar where it moved beyond the 0.5. I'm sorry, right here. This is the bar where it moved out of the blue and into like 0.5 when it closed, and now it opened and it starts moving up. That's the time when I moved the stop up to like the base. Then it moved past, when it moves past 1R, I need to move that stop to here. Then as this thing moves up beyond 1R, I just hang the blue box off the top. I was toying with the 1, 2, 3 exit, like right here at the yellow dot. That would be a 1, 2, 3, because you have 1, 2, 3. That was probably the better exit right there. But I ended up taking this exit like right in here, like spine of the dragon. All right, so now it sells off. Now this is where it makes the kata 2, because you have the swing low, successful SSC, sells off to here. The RL10 holds. It crosses through the dragon, hits the PSAR. There's my standard risk is down to here. That's the $6 risk, but I've already committed to, I wouldn't let it go below the belly of the RL10. So I'm at about a 0.7 actual risk, because I'm only going to risk, K9. I'm really only going to let it come down to here anyway. I'm not going to take a full 1R loss on that, check or hold. So again, on this one, this is, I hung the blue box immediately on it, and as soon as this one goes into the green box, I move the stop up to here to just lock in that little fraction and give it some room. So like I moved it to 0.2. So price is at 0.5 at the boundary between the blue box and the green box. I really like that as a rule of thumb, because now I can actually see that much easier than trying to estimate what price is doing. Price blips around quite a bit. So I lock in the stop to 0.2. Now it moves out of the full 1.0. I should be moving that stop up. Like on this one, I could live with either like right there. Oops, give me a red one there. Red one right there, or maybe even take half the bar and lock in one full. Oh, it's really going up. And maybe here. So now I've already locked in 1.25. and I've hung the blue bar off the top. So now my stop certainly should be right here at the bottom of the blue box. Checker hold. Tucker, I think it really simplifies the lens and makes it easier for me to tell you what I'm thinking, because what I'm actually seeing are those boxes. And then I take that's about a 1-2 exit as it comes out of that blue box. And so that's that. So this yellow box here it was like +1. So that was about a 1.2. And I think it's a little easier to see. So that was Tesla in the afternoon. The morning Tesla trade was all of this crap on the downside, right? And then all of this was mostly upside. So I was only playing the upside after lunch, just going with a single direction instead of trying to take every single. But I like the way Tesla trades in those great big swings. That feels pretty good to me. Okay, so those are the sniper trades of the day. All right, just taking a quick look at the price action today in the S&P on the simplified. Here's the PSAR flip box. The 5-period range box is now only 1/3 of the size of the 10-day box. So here's the 10-day box, and the 5-day box is like maybe 1/3 of that. And today was a pretty small range day. And all of that is sitting right in the middle of the 30-day range. So that feels pretty good. We're still 14% off the swing high, but now we're 6 days into the PSAR flip. We've actually got a little 1, 2, 3 action going here. So if it can break above that 10-day high, I'm seeing that as that would be a very positive sign. On a 10-day basis, we're still strongly overbought. The PSAR or the MACD is still kind of ticking up, but again, this is also 4 or 5 days in a row of sideways. It hasn't failed further, so it still has to prove that it's got legs. So I look at this as days 10 through 6 gave us the big strong move up. And then the last 5 days have been this sideways crap, which is okay. I like the fact that it has not failed, and the PSAR is still holding, and there's room to the upside. So now the question is, does it do this or does it do that? The least probable is that it continues in that sideways chop. So this is really a critical state, like a turnaround Tuesday, as Bob Gardner used to call that. So we're going to put a great big critical state bubble in there, ready to play the breakout in either direction. But the last directional move, was strongly up. And that's the direction of the trend right now. And then if it can get through this 30-day high back here, I'm going to take that I would take that as a very strong side. Anything north of 430 would be a very strong move. Check or hold. To the downside, breaking below the 5-day low, skin of the dragon, PSAR, belly of the dragon and the RL10, 10-day low, 30-day low. That's the usual trail of tears to the downside, right? So nothing surprising there. All standard work. On the other hand, this last RL10 is right here. So if it can break above this is really kind of like a double emerging dragon. And so that's, it would not surprise me to see him emerge and enrage. Whoop. Let's get not a Godzilla, let's get our emerging dragon up in there. We'll not get ahead of ourselves. So that would be an emerging dragon if it breaks out to the upside. And then another one up here. Okay. Let's take a look at the sectors next. So the S&P was up 0.3 today. Whoop, get out of there, ED. Diamonds were flat. Treasuries were worst at minus 1.84. That's actually a positive sign for the equities. The Qs, 0.33. Small caps, 0.43. Emerging markets, 0.54. Kind of a tame upward move. But I look at today as a Monday after a weekend. And this was failure to fail. And upside is certainly in play. Let's take a look at the downside targets. Or the downside performers. So the sectors first in red. Finance and discretionary, 0.04, I should say. Then into, the losing positions, tech, the Aussie dollar, energy, commercial real estate, Brazil, oil, wheat and precious, Mexico, ARC Genomics, and XBI. So the XBI trade was very good today. I'm going to be ready for that one tomorrow because that looks like it's in play. You got, it was a decisive downward move, much weaker than the market, much weaker than tech, and it was ARC Genomics and XBI both down big. So I think that has some legs to the downside. Rivian, individual companies, minus 4%. Robinhood and Microsoft off a half. Devon Energy flat. So some targets to choose from. Weakness in the energy sector there. All right, now symbols to the upside or sectors to the upside. So you got wood 0.33. The other lumber was 0.73. Blended commodities 0.44. VIX, then a cluster here of ARC Innovation, oil exploration, blockchain materials, staples, discretionary, global future of finance 1.26, agriculture 1.33, blended large cap crypto 1.5, FANGs, clean energy, I missed that one today, marijuana 1.8, lithium and BOCT. Then to the individual targets, Bitcoin, Coinbase, Ethereum, Alcoa, we crushed that one today. U.S. Steel was strong, 2.25. Tesla and Cliff, I take that as a really strong vote for Tesla. I will be ready for the upside on Tesla. It had a nice recovery today. There was a lot of weekend buying orders on Tesla because it was down around 700, which is why it gapped up and then sold back off to test their weak hands. But then it had a nice little recovery in the afternoon to stay 2% above that key 700 level. So Tesla, I think, has legs for tomorrow. So strong in the metals, too. You got Alcoa, U.S. Steel, and Cliff. Apple, and then finishing up with Apple, Squarespace, and PayPal. All right, let's look at the let's look at the daily reports now. All right, we'll go to dashboard number 1. Let's see here. We got still bullish normal, or a bearish normal, excuse me. Reasonable improvements on the shorter term indexes, the longer term still weak. Risk Z is giving us permission for the upside ventures. That's still looking cautiously optimistic. Strength in some industrials over here: Caterpillar, Verizon, ExxonMobil, Diamonds, IBM. Tesla, Merck, Alcoa, Disney, Walmart. So there's some big names that have some ground to make up, and there may be some value plays in there. I'm going to keep working Alcoa hard tomorrow because it was good today. And the metals were strong. Lots of dojis today. That's actually positive for the upside. You get Dow Chemical, or DuPont, I should say, McDonald's, Merck, all testing out on the auto framer. Only treasuries. That looks to me to be really tradable. I'm going to start doing more work with the treasuries. I like that smooth and orderly intraday move, and it's only got a 20-cent R10. When I reduce the MMRB to that little, then it makes it actually feasible as a trading, and there's a ton of volume on it. So it moves in a very orderly fashion. Metals and mining, oil exploration, just crushing it. PBW bears watching again tomorrow, the alternative energy. I missed that one today, but I think it may have more legs. It's in the middle of a 10-day recovery. Excuse me. Only a handful of symbols on the auto framer: Merck, Treasuries, McDonald's, and DuPont. So that we've hit those already. A ton on the squeeze, and that's going to be normal when you see how tightly compressed today's ranges were. So the entire market itself is healing. It's sort of like after a long race, it's catching its breath, and now the volatility is declining. We don't know which way the next sprint is going to be, but this is the pause that refreshes. So there's going to be some good names to watch that are ready to move, like, again, McDonald's, Energy, and ExxonMobil. Going to be nice. I like the Russell, Chevron, and Walmart. Tesla, anytime that's in here, I love it. Cliff. And the S&P itself. So there's lots of good targets. Tomorrow is the day to be ready for the expansion from that compression box. Just one Godzilla today in the S&P, REGN. Then we got in the tactical symbols some sleeping Godzillas here. VIX, and then the blended large cap crypto. REGN is raging with a 3.65 z-score. We have all popcorns now, all very, very quiet. Some that are just normal quiet. That's this range here, featuring ConocoPhillips. And then these are the exceptionally quiet, really postured for big breakouts. And I especially like it when I see Devon Energy in that category, ready for a big move, as is ExxonMobil. So let's watch those in the energy sector. The fence sitters are the ones that are tightly locked into the middle of their longer-term trading ranges. And these are all very quiet, and some are exceptionally quiet, ready to roll in either direction. Yeah, ExxonMobil's looking really interesting right there. The S&P, the most quiet, So some significant quietude. Look how many are more than one standard deviation quiet. That's how much the 5-day range is compressed. So what I really like about this 5-day volatility is that you get a much better sense of the short-term agitation or emotions of the market. So this is an entire market that is compressed there in its breathing. And then the most volatile ones, the ones that are still, but even so, there's not that many out of 500, maybe 10 or 11 that have a 5-day volatility that's abnormal. So this is quite a bit different from where we were just a week ago. And that's why you're not seeing that many Godzilla. So this is getting ready for breakouts from the inside. This is like when you see a frog jumps and he extends himself with volatility and then lands and compresses and locks in. He's getting ready for the big move next. Still being dominated by summer and spring here. Same in the Dow, the modified Dow. And again, on our tactical symbol, our tactical set, take a look at, there's only 4 out of our 50 or 40 or so that are even above 0 on the Z-score. And the most volatile one is Coinbase, and that's got a Z-score of 0.3. How odd is that? Whereas everything else is extremely quiet, all the way down to DIA, which is at 0.99, and then picking up the S&P all the way down to marijuana at. That's how compressed and in recovery this market has been. So that's I take that as a sign of potential healing and people looking to get back to business, back to work. So I would not be surprised whatsoever to see a strong follow-through week here. What with increased oil production and more people talking about a negotiated settlement in Ukraine. So let's keep our eye on all that. Standard symbols. Caterpillar, another big day today. Looking at the 10-day primarily here. ExxonMobil. Oil exploration and materials. I think the metals have a chance to really do well again tomorrow. Still poised in limbo right here. The fact that it hasn't failed, I take as a positive sign, but at some point, this has got to improve. The slope of the 30 is almost back to the long-term normal now, or long-term average. That's actually been a 2 sigma improvement from here when it was pain and suffering at 390. This has actually been some healing action that brings it 2 standard deviations back to here. So let's see. By the same token, big sell-off, small recovery, big sell-off, small recovery, really big sell-off, small recovery. So this is still very vulnerable days right now. Don't let my tentative enthusiasm, which is geared towards intraday upside moves, don't let that lull you into security. Well, this is exactly what bear traps look like. You just got to watch where you're walking. There's not a bear trap in every shadow, but that's what the conditions, that's what you would do if you were trying to trap, right? So that's why we are in bear normal. That means I am primarily an intraday trader and playing the directional volatility and taking it wherever price takes me and no overnight risk. I don't need to take any overnight risk here. Why would I? And my concern is that the last few times the 10-period regression line was this upwardly sloped, the last 1, 2, 3, 4, 5 times there has been a sell-off, 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 big sell-off, and now this has made a nice move off the bottom, and it got up to 3 sigma, and is now getting, so if ever there was a time for a sell-off, now there is. So that's why we have to be very cognizant of that, 3 or 4 day low, that very tentative support shelf that's in there. We had 4 days where it has not gotten materially higher. So at some point, failure to follow through is information. But by the same token, it has not failed further. So we are poised right exactly on the cusp of that critical state. That's why I say this is such a critical state. This thing is poised to go in either direction. There's not much, it doesn't take much to tip it back to the downside or to the upside. Yeah. So take your guidance from the S&P for intraday conditions. Watch the VXX for incoming increase of volatility. If you recall, volatility was one of the Godzillas, right? Or was he a popcorn? No, yeah, there is. Godzilla in lurking. It's smashed and very, very, very quiet on the volatility. That's a concern. All right, back to the traders. Now, this is Wojcik. I think you're over trading, man. This was, I want you to pay close attention. Go back and look. I'm on 3-minute charts. I was not trading anywhere near as many trades as you are. I'm trusting the PSAR, and I just think you're getting in your own way here. I think this is too much activity. Like, I think there's so much trading going on here. There's 10 trades in there. There's another 10 trades in here. That's 20 trades. And I think you're too tired. And then when the standard PSAR flip hits, that should be one trade following that PSAR all the way down. And then that should be a trade following the PSAR up. And that should be one trade following the PSAR down. And we should be getting paid on that. Like this one. Here's a long. Here's the 1.0. Here's the trailing side. Now, notice where I was putting my red lines today. Remember, everything inside this box is noise anyway. And if you stop there with a 0.5, you're in this trade the whole way. And this one, you're in that trade the whole way. And on this one, that doesn't get you out. You're in that trade the whole way. So I just think there's some, well, it's only not simple until you get used to doing it, until you quiet the monkey mind. So I've got a bunch of material from Jennifer Shannon, and she is a CBT, cognitive behavioral therapy person who deals with anxiety, and has a nice series on monkey mind, and it does a nice job of Western science and psychology compared to sort of Zen practice from Eastern science. So I'm going to put together a course. She's got 30 exercises to calm the monkey mind, and I'm gonna add that to the. So we've already got the resilience course, and I'm going to add to it the monkey mind course, based on her work and some stuff I've done in CBT and stress management. So that's coming. Now that graduation is out of the way, and we'll be all right. All right, here's Paul. I think this was slow to get in. That's the indicated risk box, and the entry is here. And then if we take, so let me just show you again. If we take the if we take that as the risk box, and that as half the risk box, now you're out beyond the Z3. So if I take that little box and bring that down here, I end up getting out here. And now the difference is, instead of trading from here to here for 0.09, you're trading from here to here for something better. That's probably 0.4 is what I'd guess. Whoops. We drop the mouse. Mouse drop. This one is a front run of that a little bit. I kind of like that. This is way too, what are we doing here? That we should never get that in hand until we are above this price level here. All the way up into here. This is just one position traded correctly. And we turned a winning position into a losing position. Now this is a good short. I like the recovery. The exit here is pretty good. That takes that same idea of half the risk box off the bottom. So that's good practice. I think we could have gotten short maybe again here, but that's still pretty good. When this goes down, comes back up, let's scratch that instead of taking a 0.4. And then we can be long here. And then the same logic would get you out here. It's whatever your MMRB is, your 1.0, taking half of that, and especially on these exaggerated gains, just hang that'll get you out of those, and you'll get that trade. And then this one, so there's 1, 2. That was pretty good. 3 places we could get a lot better and then avoid that second loss in there. We'd be in good shape. But still, got paid to learn today. PSAR flip. Opportunity. This is where the exit is indicated. Great short. Pretty good. I would like to keep more of that. That's good. Good scratch. This one got away from us. That was chasing. We should be on that here. And then when it reverses in that same bar, let's just acknowledge that that was wrong. This is one where I got to capture more of this gain. That's one where I got to get better. And then I think you were upset. And we should have had this one short here. Same tight wrist box. That's the same pattern as this one on the other side. And then we get paid on that instead of losing. Reasonable effort. Got paid. This is pretty good. 1.7. I think there was more room. I think we got a little tired in this space here. But this is the simplified chart is looking like it's working for you. I'm liking that. All right, Brazil, Van Miller. Yeah, 1, 2, 3. That's good. Quick scratch. Rebound. I think I like that. When this rolls over quicker, I'd like to see you just get out here instead of. Then this is the short instead of here. Yeah, you wanted to get the money back, and then we can get. This is a doji. We can get short right here instead of down here. And then if I'm that far in the win, exit here instead of up here. Stayed out of the chop. That was worth a shot. Good scratch. Perfect PSAR flip and go. This one failed right away, so let's just get out of there after 2. So this is looking like 0.6, about +1 for the day. Oh, wait, +2. Oh, I missed this one over here. Yeah, and then a really nice one on the short side. So 1.6 for the day. Nice work, Van. Or 2.2. Very, very nice. Griff. This is the CD. This feels like it's slow. This feels like this should be here instead of here. Yeah, that we should have that one. Decent. Correct. And correct. 2R in Brazil. So here's a couple for Luke. This looks slow. We should be here instead of here. Then I think we get this trade instead of that trade. Good short. We might have done just a little better here than there. That's pretty good on the rebound. We got to get more than that. So I'm looking at the size of your on these, right? With a 1, 2, and then peak. That should just trigger. You just know. So if that's your standard box, and that's your half a box, my calibrated eyeball, this box is that box. So we should be getting out here instead of here. Then this short should be here. Yeah, you got to take that exit and re-enter, and then I think you got to scratch that sooner. And then this entry should be where that one exited. Then that just caught you. This chop was just, yeah, that's minus 1.5. That's minus 3, but that should probably be minus 1.5 if we were a little tighter in our shot group here. And you crush this. That's good. This that could be the short instead of here. And then I got to get paid better. I can't take an X on that one. And then on that rollover again, here instead of here. And then that's a scratch instead of minus 0.8. And then when it fails again, it's here instead of here. And then that becomes a win instead of a minus 0.1. This may be here. That's about as good as it was going to get. And then weak on the exit. So we gave back 0.5 probably 5 times today. So I think it got a little tired in here, but we escaped with our skin. So we'll take that as a living reminder that that market is constantly giving birth to young, hungry carnivores, and that they're coming after you all the time. That's a nice, pleasant thought. And I think, yeah, where do I saw Paul's? All right. So that's everything for today.